Move into bonds. Bonds did move higher a little bit as a flee to safety. Utilities were doing actually pretty well. They were pretty strong in the morning. They had a very positive day, up almost 1.5%. But when there's very strong panic selling in the market, it tends to still pull even the defensive sectors down. So it still pulled utilities down a little bit, but only down at 0.5%. Very low volatility. And when we take a look over at gold, gold ended up trading relatively flat as well, holding its value. But again, there was panic selling, so it kind of neutralized. If there's too much panic in the market, it will still cause gold to pull back a little bit in some cases. But it's nice to see how that happens. Now, perfect example of why I like gold versus mining stocks is simply because of this. When we do have a big sell-off in the stock market and the precious metal space is still long, well, you end up with, you look at silver miners or gold miners, they're all down 4.5% to 6% in one day, simply because they are stocks stuck in a stock market that the tide is going down and they're naturally going to get liquidated. And when there is panic in the market, it causes people to just freak out and start to liquidate positions that should be doing all right and should hold up and go higher later, but they'll still panic out. That's the problem with fear. It makes you put on some pretty bad trades and make some poor trading decisions. So that's why I like gold. If we take a look at silver real quick, down 1%, which isn't much considering how volatile silver is. It's holding its value. And again, that's because gold and silver are commodity. They're not stuck in the stock market. So the stock market can go down and these separate commodities are their own beast. They can hold their value or go in the opposite direction, which I do expect that eventually we're going to see money want to flow into potentially gold and precious metal space here.